Hello, everyone. Good evening. I hope everyone had a great morning and a great afternoon. Today being 25th of November, a Monday, a start to the week, and today's start has been fantastic, right? Especially when we have been talking about the Indian share market. In terms of the index, the prices had gapped up by almost 1.65%, right? Because of the optimism of the BJP party led coalition that has won the Maharashtra state elections, right? Assembly elections. So let us start today's third live streaming session with a quick introduction about myself. I am Harsh. I have 8 years of trading experience. I have been trading the Forex market, the commodity markets such as oil, gold, silver, as well as the US based indices such as the S&P 500, the Dow Jones 30, and the Nasdaq 100. We have been looking at the Indian share market as well, where we analyze the blue chip indices such as Nifty and Sensex, as well as analyzing for hot stock recommendations in the individual Indian shares. I am more of a technical trader, basically following technical analysis. I specialize in various concepts such as supply demand, price action, order flow analysis, swing analysis, wave analysis, and Fibonacci retracement analysis. I have been blessed to be mentored, to be trained by some of the brightest minds in the financial markets. I have had the privilege and the opportunity to be mentored by people who used to work as flow traders on the Chicago Mercantile Exchange. So it has been a blessing in disguise for me to gain and learn from such bright minded people. Here, I have also been successful in handling $20 million worth of portfolios and have also been successful in generating 30 to 35% profitability on an annual basis. The reasons for for sharing these details are so that you can be rest assured that the content that I'm providing you is being provided by someone who has the information, who has the knowledge, the experience, and the expertise, right, when it comes to the financial markets. So I hope everyone is up and ready for today's third live streaming session, right? This particular live streaming session will be shifting the focus from the Indian share market to technical analysis of the share market, the forex, and the gold markets as well. I hope everyone can read today's title, correct, of today's live streaming session. Today we will be diving deep into technical analysis, but since today being Monday, we would be focusing again on the basics, correct? We have structured and outlined a plan for our beautiful community members where Monday's third live streaming session will be based towards the basics of technical analysis. Tuesday's third live streaming session will be, a step higher when it comes to technical analysis. We would be talking about the mid-level technical analysis strategies, right, pertaining to technical trading. Then on Wednesday's third live streaming session is when we will be focusing more on the advanced concepts of technical analysis. So let us start today's third live streaming session where we will be looking at the markets. But before I dive into the PowerPoint and into identifying, illustrations in the real-time market conditions, it's very important to be clear in terms of how the markets had concluded for today, right? So a very quick summary in terms of how the stock markets have closed for today. So a quick read, right? Benchmark equity indices, the BSE index and the Nifty 50 ended the first trading session of the week on a higher note, right? Rising over 1% each. So markets drew encouragement from the massive victory of the BJP led coalition in the Maharashtra Assembly elections, as well as strength in the global markets. So the BSE Sensex has jumped by 2.54%, and in terms of Nifty, it has jumped by 1.32%. Out of the 50 constituent stocks listed on the National Stock Exchange, 47 of them have ended in green, led by ONGC, BEAL, BPCL. So it's basically the oil sector, right? And in terms of the other markets as well, so it is basically the Nifty PSU, public sector undertaking banks. So the banking sector has done phenomenally well, ending higher by almost 4.16%, right? So today has been a very good day in terms of bullish optimism in the markets, right? When such strong bullish optimism kicks in the market, those are good signs that the market is reviving back from its bearish slump. All right. Now coming back to trading view, but before continuing, a very quick important note, right, which has to be provided to all our clients, right? Before we dwell back into the market, into the PowerPoint, let me show it to you. Is none another than our detailed and meticulous analysis sheet, right? Showcasing how diligently and how consistently we have been providing you with trade recommendations when the Indian stock market is open, and also providing you with where to close trades so that you can make a consistent profitability of around 5%, right? So over a span of just above 2 months, with 29 trades that have been taken and squared off, we have been able to achieve a cumulative profitability of 168%, right? So I feel, and I'm pretty sure everyone understands the value that we are able to provide. All right, so this has been a quick update in terms of our analysis sheet. Yes, as of today, we have been grateful enough, right? Because we have done phenomenal when it comes to the profitability, right? Today's day is today being 25th has been a phenomenal day. We have been able, or let us say, let me put it in this way, that three trade opportunities, three hot stock recommendations that were provided to you have been achieved target, right? So we had Marine, we had Evantil number one and Evantil number two. So two trades were provided on Evantil, one trade was provided on Marine, and today is when all of them have achieved the 5% profitability. Like I had mentioned to you, because of the optimism in the Indian indices, right, the Nifty and Sensex, it has trickled down to all the sectors and the individual stocks too. So Evantil and Marine have led us to make today not 5, not 10, but 16%, right? Two trades were able to generate 5% and one was able to generate 6%, right? So now that we are sitting at a 16% profitability as of today, how commendable, right? How fabulous it can be. All right, now let us come and start with today's content, where we will be focusing on, we would be shifting our focus from, analyzing and providing you with hot stock recommendations to providing you with learning opportunities, right? Once the market is done and dusted, I mean, as in how the market, the Indian share market is done for today, has concluded for today, we are shifting our focus to learning about technical analysis, correct? So let's dive right into the charts and into the PowerPoints, because it's very important to understand for all of those um, who have just started on undertaking our live streaming sessions. To all those people, we generally follow a structure and we would want to follow it in the future as well. So let us start with the first and foremost important but basic introduction to technical analysis, right? So I hope every one of you are aware what technical analysis means and what is its significance, right? So a quick introduction about technical analysis. Technical analysis is a method of evaluating statistical trends in trading activity, typically involving price movement and volume. Unlike fundamental analysis, which attempts to evaluate a security's value based on financial information such as sales and earnings, technical analysis focuses on price and volume to draw conclusions, right? So I'm pretty sure everyone is aware what exactly technical analysis is. We basically we basically evaluate price trends and patterns and thereby identify potential investments and trading opportunities, correct? So technical analysts believe that past trading activity can be a valuable indicator of a security's future price movements. So the key takeaway is what has happened in the past on the charts. If it has happened in the past, we expect it to happen in the future as well, correct? And it can be contrasted based on fundamental analysis. Basically, by using fundamental analysis, such as companies financials, we as technical analysts use historical price patterns, correct, or stock trends to evaluate and analyze what the future can hold for us, correct? So let us start with the first and foremost basic technical analysis, right? So we will be starting with the basic structures in terms of different concepts of basic technical analysis. Now let's start with the first one, which is called as trend line. I'm pretty sure many of you are aware of what trend lines are. Trend lines are basically lines that are able to connect as many pivot points as possible. Now, what exactly are pivot points? Any of the turning points seen on the price chart are called as pivot point. The more number of tests a trend line has, the stronger it is considered to be, right? So first, we're starting with the uptrend, right? Trend lines that are continuing in an upward fashion, where prices are increasing with higher highs and higher lows, we call those as uptrend, correct? Then we will come to downtrend. Remember, whatever information I'm providing to you, first we will have a quick theory based on what the definition is, and then we will shift to the charts, right, to the real time charts. And today we will be looking at forex and gold. We might come across certain Indian stock pairs, but our focus will be more towards forex and gold markets, all right? So coming back to downtrend, similarly to the uptrend, downtrend is the opposite of the uptrend, right? Where a trend line, a line that is connecting as many pivot points as possible, and the prices are continuing in a downward fashion, right? So when I was talking about uptrend, uptrend is also called as a bull trend, correct? I'm pretty sure everyone is aware of the two terminologies that are used heavily in the markets. We call uptrend or bull trend or bullish market, correct? And on the contrary, we call downtrend as a bearish or yeah, just a bearish market. The prices in general can move only in three directions, correct? Either it can move in an upward direction called as being bullish, it can move in the downward direction called as being bearish, and it can be moving in a sideways fashion or also termed as neutral, correct? So we talked about uptrend, we talked about downtrend, and neutral or sideways is where the prices are oscillating and continuing in a sideways manner. Similarly to the trend line, we have something called as a channel. When a trend line is drawn, it is only indicated by a singular line, correct? As you can see on the chart. But if you're looking at a channel, it is basically a trend line which is duplicated so that the price is oscillating between the channel, correct? The prices are oscillating between the channels. So similarly to an uptrend line or a downtrend line or a sideways trend line, we have an upward channel, a downward channel, and a sideways channel. So this is the example of an upward channel. Similarly, based on the downward channel, as you can see, the prices are oscillating between the channel, correct? So a trend line that is duplicated, so that price is oscillating between the two trend lines. Two trend lines comprise of a channel, right? It's as simple as that. and sideways is where prices are oscillating in a sideways manner, and it is, between two horizontal uh, trend lines. All right, now let me just go to the charts and let us analyze a few examples based on real time, because the forex market is open, correct? So we would be talking about forex and gold markets. Let me just start with a pair such as Aussie dollar, right? All right, now in terms of Aussie dollar, let me make sure. Okay, let me give you another pair. Let me use dollar CAD. Okay, so in terms of dollar CAD, let me just show you. So as we were talking about trend line, correct? So trend line has, since the prices can move only in three directions, the trend lines are also segregated into three directions: trend lines and channels, correct? So first we will draw an uptrend line or a bull trend line. So let me take out the trend line tool, and this is how we draw. So as many points as possible, the more points or the more pivot points that can be connected, the stronger the potential, right? So pivot points are basically turning points that are, on a price chart. The more the number of touches, the better, correct? So let me use a polyline or an arrow to draw the path. So since prices have been, going in an upward direction or in a bull, it's been following a bull trend, the prices have been continuing up. So the line that is holding with prices continuing in an upward fashion is called as an uptrend, correct? Now similarly, this was the example of an uptrend. Now on the opposite side, let me show you the example of a downtrend. Now, a trend line that is able to connect as many dots, pivots as possible, right? Let me show you a good example. All right, here. A line that is able to connect as many dots as possible, right? When prices are moving in a downward fashion, this is called as a downtrend line or a bearish trend line, right? As many pivot points as possible. So we have one pivot here, two pivots here, and almost a third pivot here. This, since the price is continuing in a downward fashion with the trend line touching as many pivot points as possible, this is called as a downtrend line or a bearish trend line. And which was the third direction I was talking about? The third direction was sideways, correct? Which is also called as neutral. Let me just identify for you. The prices going sideways generally are, short lived. They do not travel much, and they try to stick within the range, right? So let me just give you a clear example of a sideways movement. In terms of sideways, the reasons we are focusing on such, we are analyzing it on real time charts. Remember, yes, the data has been plotted in the past, but at that time the data was real. So first we have to be clear in terms of understanding the basics. Many people, many investors as well as traders skip the step of fundamentals and they want to jump directly into advanced technicals. So all those people who are following this particular mindset, it is completely wrong. The fundamentals are the most important building blocks, correct? So you focus on the fundamentals, you will be able to improve your mid-level and advanced level technical analysis, right? So never take the fundamentals lightly because they hold the biggest weightage when it comes to understanding the basics of market structure. All right, with this particular example that I'm showing, the prices are going in a sideways fashion, right? With as many pivot point touches as possible. So such a market movement where prices are going sideways is called as a sideways channel or a sideways trend or a neutral trend line. Right now, this particular example, since it's sideways, will be oscillating between two pivot points. So we would generally be using a channel for this particular situation, right? But when I draw a single line, it is called as a trend line, right? Let me just type it down for you. The The moment the trend line is duplicated and placed on the opposite side, that becomes as a channel. So I hope everyone is clear with this concept. One single line is a trend line. Two parallel trend lines constitute a channel. Now I've shown you examples of bull trend line, bullish trend line, bearish trend line, and sideways trend line. Now let's look at channels. As I had shown you, based on the trend line, you know what? Let me use a channel itself. Let me identify where I can get the channel. So channels are important. We can either use the tools of trend line, but I would prefer to use a channel, right? Just give me a minute. Trend line, channels, 1 second. All right, so here we have the parallel channel. All right, so rather than using a trend line and duplicating it, let us use the indicate the drawing tool called as channels, right? So channel is nothing but a trend line that is duplicated, correct? So this is how the duplication takes place, and we have to see that prices are oscillating between the channel, correct? So with a channel that is constituting of prices oscillating and continuing downwards is called as a bearish channel, correct? And similarly, based on prices continuing in an upward fashion, right? Let me connect as many points as possible to showcase you the channel, right? So this is a nice depiction of a channel with the prices constituting with the prices oscillating between a channel and prices appreciating in price appreciating in direction, right? It's called as a bullish channel. All right, I hope people are able to understand. This is very basic, I get it, but it is very vital to be clear in terms of understanding what exactly a channel is. Sorry, 1 second, let me change the color. Oops. What exactly a channel is and why it is necessary, right? So we have either a bearish channel where prices are oscillating between and continuing in a downward fashion. We have a bullish channel where prices are oscillating between and are continuing in an upward fashion. And like I had mentioned to you, we also have something called as a sideways channel, correct? So a sideways channel is something similar to this where prices are going in a sideways direction, right? The markets can only travel in three directions, either in bullish, either in within a bullish channel, or a bearish channel, or a sideways channel, right? Because the direction of the markets can only be comprised of three directions: uptrend, downtrend, and sideways. So this is called as a sideways channel. All right. So I hope everyone is clear. We have given you real examples from real markets where we have been trying to identify trend lines and channels, right? So we found an upward trend line, a downward trend line, and a sideways trend line. We also evaluated and analyzed, an upward channel or a bullish channel, a downward channel or a bearish channel, and a sideways or a neutral channel. All right, now that we have covered these particular topics, let us go to the next concept, right? And that would be based on 1 minute. That would be based on breakouts. So everyone is aware of trend lines and channels, that prices are oscillating between two channels or a trend line and prices are holding. But since the markets are dynamic, since the markets are moving, there will come a point in time where the prices will break, correct? And those are called as breakout. Whenever, as you can see my screen, when prices are holding the trend line, very good. But the moment the prices are able to break out and close outside the trend line or the channel, we call that scenario as a breakout. The breakout indicates that the trend that had been holding is now reversed, right? So in this particular example, the trend that was continuing was bearish. Once the breakout took place, the trend shifted from being bearish to being bullish, right? So breakouts are good examples where we can expect prices to reverse, right? So we have something, what as you can see on the screen, this structure is called as a bearish to a bullish breakout, right? The trend had been bearish. Once the breakout took place, it shifted, it reversed the sentiment from bearishness to bullishness. Similarly, on the contrary, we have a bullish to a bearish breakout, right? The terminology breakout is very simple. If a trend line or a channel is taken out by a candle closing outside the trend line or the channel, a breakout takes place, correct? Indicating a shift in sentiment from bullish to bearish, as in this example, and in the previous example, from bearish to bullish. All right. Now that I've given you the theoretical explanation and even depiction, right? Let us go and see it on the chart so that we can be more clearer in terms of finding these breakouts. So give me a minute. Let me remove all the drawings. Now let me go to another pair. We have done euro dollar. Let me go to dollar Swiss, correct? There are many forex pairs when for analyzing, and that is the beauty of the forex markets as well. Yes, the English share market also has a lot of stocks to choose from, but there are a lot of limitations when it comes to the English share market, and there are more advantages when it comes to the international markets, right? The forex, gold, and the CFD markets. We will be talking about the distinctions and the differentiations in another live streaming session. But right now, let's get back to the concept of breakouts, right? So let me just showcase you a clear depiction of what exactly is the concept of a breakout, right? Yes, I have explained it to you via theory, but it is important for me to explain it to you via, you know, real base examples as well. As you can see, the prices had been oscillating. Let me change the color to green since it's bullish. The prices had been oscillating in an upward direction. It is at this point in time that when a breakout takes place, let me just change the color. This is the terminology called as breakout, correct? Now that the breakout has taken place, the sentiment has been shifted, correct? The sentiment has been shifted from bullishness. Oops, one second. From bullishness to bearishness. So a breakout basically index a shift or a reversal in the sentiment, right? When prices were continuing in an upward fashion, in a bullish fashion, and once the breakout took place, that indicated now that the bullish movement of prices has come to an end, and it could be the start of a bearish momentum, right? So that is how we identify a bullish to a bearish breakout, right? These are basic terminologies, but these are very vital for our success in financial trading, right? So this is a bullish to a bearish breakout. Now let me show you an example of a bearish to a bullish breakout, right? Similarly, if we are identifying a certain place in point where prices have been continuing in a downtrend, right? And the moment the prices are able to break above it, indicating that yes, now the trend that was bullish, the trend that was bearish has come to an end. And now it indicates that prices will have a tendency to a tendency to continue higher, right? Now that the prices were bearish, but because of the but because of the breakout, the sentiment has reversed from bearishness to bullishness, correct? So this particular situation is called as bearish to bullish breakout, correct? Now there is no sideways. There is, I mean, since the markets move in three directions, we have uptrend, downtrend, and sideways. But when it comes to breakout, there are only two types of breakouts that can take place: either a bullish to a bearish breakout or a bearish to a bullish. So I hope everyone is able to understand and get the concept of breakouts clear, right? When prices are traveling in an uptrend and a breakout takes place to the downside, it indicates that the bearish sentiment has shifted, the bullish sentiment has shifted and become bearish. Similarly, when the prices are continuing in a downtrend and the prices break above it, that indicates that the prices which were having bearish sentiment have now reversed to bullish sentiment, right? So I hope everyone is able to understand, correct? Let me just make sure I can remove all the drawings and let us get back to the PowerPoint. Now, this was the concept of breakouts, right? Now, let us look at formations. Formations are important as well, correct? Now, looking at formations, let us start with the most basic formation, right? Everyone who has started with learning about technical analysis has always started with the basics of formations called as support and resistance. So support is nothing but an area of interest where we expect prices to hold and continue up. The other term used for support for easier understanding is called as a floor. If you're standing in your home and you have a ball in your hand, and if you throw the ball onto the floor will act as a support and the ball will bounce from that floor, correct? So that is the analogy or the illustration for making people understand what a support is. Like we have a support, we also have something called as resistance. Now, similarly to the example given of a house, if you throw the ball on the floor, a support will be acting in place. But if you throw the ball up to the roof or your ceiling, correct? The ball will touch your ceiling and will throw the ball back down, correct? It will bounce from the ceiling. So resistance is an is an area of interest where prices are tested and are pushed lower. So a resistance resembles a ceiling and a support resembles a floor, right? It is as simple as that. Anytime prices come back to the floor, the prices will bounce to the upward direction. Anytime prices come to the resistance, the prices will test and will return back down. Now, how do we identify support and resistance? Let us quickly have a look on TradingView as well. Now, in terms of support and resistance, remember the markets are dynamic, so you will not always have textbook examples, but I will try my best to give you and make you clear in terms of these kind of concepts, right? So, where previously prices had reversed from, the next time whenever prices come back, you have an area called as resistance because prices came back to an area of interest, and the second time prices came back to that same area, the prices were pushed lower. So such a phenomenon is called as resistance, right? I'm sure everyone it's easy to understand, correct? Let me show you with an example of support. On the contrary, as we had talked about resistance, a support is an area of interest where prices have been accumulating, and every time the prices come to test the area, the prices react. So a support or a floor, correct, is created. Support, we basically use support and resistance, correct? SNR. So these are illustrations where prices are you know acting as support or prices are acting as resistance. They may sound very basic, but these are the building blocks when it comes to technical analysis, right? So these are the illustrations when it comes to support and resistance. Let us get back to the chart, sorry, to the PowerPoint in terms of analyzing the next concept, and that would be support resistance breakout. Now, as we had discussed about support and resistance, like the markets are are dynamic and they keep shifting, right? They keep changing. So there will come a point in time when a support will be broken or a resistance will be broken. Now, based on my screen, as you can see, a previous area of resistance, correct? So this is a resistance area that has been taken out. So the general consensus is when prices are approaching resistance, we expect prices to hold and continue down, correct? Because that is the ultimate function of a resistance, as you can see on the screen. Every time a price comes to an area of resistance, we expect prices to push lower. But there will come a point in time when it will be broken, correct? Now, when a scenario takes place where a resistance has been taken out by the candles, it creates an inverse. So the resistance that was in place now gets converted to support, correct? So that is what is called as a breakout, a support resistance breakout, or a resistance support breakout, correct? Similarly, we have structures which are very similar but they hold the same concept, such as squeeze and breakout. So first, let me just get back to support resistance breakout, and let me show it to you on the charts, right? So I hope everyone is understanding. Yes, it might sound basic, but these are very important, vital information that is, you know, uh, which is compulsive for your success in financial trading. Now, let me just show you an area where I can give you a very clear depiction of what a support resistance breakout is and what a resistance support breakout looks like. All right. So, okay, I found an area, a very good structure to showcase you. Looking at this example that I have drawn, the previous structure that was holding price was a resistance, correct? A very strong area. Since prices had come back to the area for the second time, the prices were pushed lower. Now, once the prices came back for the third time, there was a general consensus for prices to hold it. But because there was a breakout, right? That is the term used, breakout, support, resistance, breakout. The moment the breakout has taken place, the the reversal, see, breakouts are generally known as reversal scenarios, right? Whenever breakout takes place, it indicates that the previous trend or the previous sentiment that was playing in the market has been shifted, right? Or has been reversed. So in this particular scenario, when the resistance, right, was taken out by the breakout, it flipped its characteristics flipped. So from resistance it became a support, right? I'm just trying to show you in a pictorial illustration, so it becomes very simple to understand. The resistance has now flipped into a support, right? So this is what a resistance to a support breakout is. As I was showing it to you on our PPT, we call them as support resistance breakout or resistance support breakout. In simple terms, we call these as flip. It's flipped, right? So support that was holding has flipped into resistance, or a resistance that was holding has now flipped into support. It is as simple as that. So we basically would be calling these structures as, you can use the terminology which would be basically resistance, support, breakout, or you can just call these structures as flip zones, right? Zones that should have held, but since the breakout took place, the characteristics have reversed as well. So in this particular example, where the resistance was at play, because of the breakout, now you have the support that is holding, right? It became the opposite. The resistance got converted to support and prices are holding and continuing higher. These are examples of flip zones, right? Now, on the contrary, let me show you another example where prices have been doing the opposite structure. So, a support that was in play, as you can see over here, the moment the breakout took place, it flipped, right? Having its characteristics flipped from being with the support in play, now getting shifted to or getting reversed to a resistance, right? So this zone is again called as, rather than support or resistance to support, it will become support to resistance breakout, correct? But more, or keep it in simple terms, we just call them as flip zones. So we have a resistance to a support breakout, and we have a support to a resistance. The moment the zone gets taken out by a breakout, it flips the characteristics, correct? So that is the entire concept which is meant by, resistance support breakout or support resistance breakout. Now, similarly to the concept of support resistance, we have something called as a squeeze and breakout. So, squeeze and breakout is nothing but a channel. It's very similar to a channel, but instead of having parallel trend lines which comprise of a channel, the channel is constricting. So, it's becoming thinner. It's tapering right towards the corner. The moment the breakout takes place, it indicates that the prices have shifted the sentiment from bearishness to bullishness, right? For this particular example, the trend was bearish. The moment the breakout took place, the trend shifted from having bearish sentiment to bullish sentiment, right? So this is an example of a squeeze and breakout. You can even have the reverse where the squeeze can be bullish, where the prices are appreciating in value, and then the reverse, correct? So these are examples. I mean, I'm pretty sure I would not have to show you a illustration for this. Let us go to the more important concepts, right? So after support and resistance, the next important concept that people try to focus or have a tendency to look upon is double tops and double bottoms. So double tops and double bottoms are very similar to the resistance and support areas I had showcased you previously, right? Double top, from the word, from the name itself, suggests two tops, right, which are next to each other. And the moment a breakout takes place in the opposite direction, you expect prices to continue down. This is what is called as a double top, correct? And on the contrary, double tops are also called as M pattern, right? Because it resembles the alphabet M. On the contrary of double tops, we have something called as double bottoms, correct? Now, double bottoms are what? Same, but having an inverted picture. Double bottoms are also called as W formations, where prices have created two pivots, right? With the outline of an alphabet W, and the moment the breakout takes place, that indicates that prices will be continuing in that desired direction. So a double top indicates that prices will eventually have bearish sentiment, right? And for double top, the it indicates that the prices should be having a bullish sentiment. Let us get to the charts and let us see how we can analyze double tops and double bottoms as examples. So I have got a good example over here. In terms of double top, we identified two structures which are resembling an area of support, resistance. Double tops indicate two tops which are next to each other, which are also forming the alphabet M, correct? So this is how a double top looks like. And the moment the double top prices are able to close below the double top structure, that indicates that the prices should be continuing bearish, right? Remember, these are real examples, right? So I'm just trying to showcase you the depiction of what a double top or a double bottom is. Not always will you find a hypothetical scenario where prices are exactly doing. Remember, the markets are not ideal, the markets are practical, correct? The markets are not hypothetical, the markets are practical. So this is an example of a double top. Remember, double top is very easy to identify. Just try to visualize the alphabet M, correct? And you will be able to draw double tops. Now let me show you examples of double bottoms, right? On the contrary, double bottoms look very similar, where we have an area of support, and that is the easiest way to start analyzing and assessing. So Let me denote the bottom. So we have one bottom over here and the next bottom right next to it, right? So what does a double bottom look like? A double bottom looks like the alphabet W, right? Where prices are correcting, creating a double bottom. And the moment the prices are able to break the area called as neckline, correct? The area that a double bottom comprises of is, of course, of the two pivots which have been mentioned, but more importantly we have the base of the double bottom, right, or the base of the double top, and those the structure is called as the neckline. The moment the prices are able to break out, that is when the prices are signifying that the prices will continue in the direction of the breakout, correct? So these are examples of double tops and double bottoms. What are double tops called as? Double tops are called as M pattern formations, and double bottoms are called as W pattern. It's very simple to understand, yet very important as well, correct? Let's look at some of the other concepts in terms of strategies. Uh, we talked about double tops and double bottom. And after double tops and double bottoms comes the head and shoulders pattern, right? Now, head and shoulders patterns are very important and are very interesting, right? So, what is a head and shoulder pattern? Like us human beings, we have a head and we have the left shoulder and the right shoulder. So, a double top, sorry, a head and shoulders pattern is similar, where we have a left shoulder, a head, and a right shoulder. The moment the prices are able to break below the neckline, remember, as I showcased you in the double top and double bottom, the neckline is basically the base of the structure, right? The moment the neckline breaks, it indicates that now the prices should be continuing in the direction of the breakout. So let me just show you an example of a head and shoulder, and then we will move to the next topic. There is so much to cover when it comes to such when it comes to basic technical analysis. So, but I'm pretty sure many of you would already be having a good amount of knowledge, right? But it is very vital for me to cover up this information as well. So let me just show you an example where we have a structure where we have the left shoulder. I'm just going to use annotation, right? Short forms. So we have a left shoulder, then we have the head, and then we have the right shoulder, right? So let me use the arrow to illustrate how does it look when we are using to connect lines, correct? So we have a left shoulder, we have a head, and we have a right shoulder. The moment the structure or the neckline, let me use the trend line to draw. So the moment the neckline has been taken out, that is the time that indicates that the sentiment which was, it's not the sentiment, but to keep it easier, it's the direction of the breakout. The moment the breakout takes place, since the breakout is taking place in the downward direction by a red candle, it indicates the sentiment for prices to continue down. Now, this is a very typical example of a head and shoulder patterns, but people need to be aware that there are many structures when it comes to head and shoulders, right? So let me just draw it for you. We have structures called as a head and shoulder pattern, right? That we had just talked about. The moment the prices are able to break the trend line is when we would be expecting the prices to continue in the direction of the trend line. Now, similarly to a head and shoulders pattern, we have something called as an inverted head and shoulders pattern, correct? So for an inverted head and shoulders pattern, the structure is the same but inverted, correct? So we would have a structure where prices are creating a pattern formation as the one showcasing on your screens, correct? Where once the prices break in the direction, the prices tend to continue in the direction. So the above example is called as a head and shoulders pattern, and the below example is called as an it's called as head and shoulders, but since it is inverted, it is called as an inverted head and shoulders pattern, correct? So I'm sure everyone is aware of these terms. And for those who are not, who are new to for technical trading, I hope you are able to get a good amount of information, correct? And let us just look at some other concepts as well. Getting back to the PowerPoint, so we were looking at the various types as I mentioned. We have a head and shoulder, we have inverted head and shoulders, and we have sometimes where the left shoulder is smaller than the right shoulder, or the right shoulder is smaller than the left shoulder. But at the end, we are basically looking for three tops, right? Like how we have a double top. This is very similar to a triple top. Triple tops are different, but it's very similar to the concept of triple tops. Next, let us look at how the patterns can continue or reverse, right? There are only two types of patterns when we are looking at the technical analysis. Either prices can continue in the direction of the previous trend, which is continuation pattern, or prices can reverse. If they were bullish, the prices reverse and become bearish, correct? So these are continuation patterns. For example, where prices were continuing in an uptrend, the prices started to consolidate, but eventually the direction resumed, right, with prices being bullish. And on the contrary, when prices were being bearish, the prices were consolidating, right, between a channel or a trend line. And once the breakout takes place, it continues with the previous sentiment, right, with the bearish sentiment in place. So these are different structures with when it comes to continuation and reversal, right? This is an example of continuation. Now let us look at reversal patterns. Now we talked about continuation where it breaks and continues with the prior sentiment in place. With reversal, as the word suggests, we expect prices, we expect the sentiment to shift or reverse. So like we had discussed about double tops, double bottoms, head and shoulders, triple tops, triple bottom, they all come under reversal patterns, right? We have discussed a good amount of detail, and these illustrations are more than enough for you to understand. For those who are asking for this particular PowerPoint, whether Harsh, can we have your PowerPoint? It's very informative. Yes, you can have, but you would have to contact my team of assistants, and they would, help you with providing you with this particular PowerPoint in place. Now, in types of entries, we basically have, two types of entries. One is entry on the breakout, and one is entry on the break and retest. So in terms of breakout, let us see an example where prices were continuing in a downward fashion, correct, in a downtrend, and prices started to consolidate sideways. So you can see that two parallel lines are drawn, basically comprising of a channel, and prices are sitting inside. The moment the prices break out, this is called as a breakout. So one is entry on breakout, and the other one is entry on the break and the retest. So this trade would be comprising of entry on the breakout. There has been no retest as of now, correct? Another example, and this example refers to a continuation pattern, as we have discussed. Prices were continuing in the downtrend, then the prices started to consolidate, and once the breakout took place, the prices continued in the same direction as it was previously continuing. Now let us look at the opposite, right? Reversal, where prices, for example, were continuing in a bearish sentiment, in a bearish momentum. The prices started to consolidate, and the moment the breakout took place, the prices reversed from bearish sentiment to bullish sentiment. Correct. So these are called as pattern formation, right? Either continuation pattern formations or reversal pattern formations. So we were looking at certain examples such as these. Now, these were breakout trades, right? The moment the prices had broken outside, the trade was initiated. So there are two types. One is entry on breakout. The moment the breakout takes place, people enter. The second type of entry is what you call trade on breakout and retest. So we, rather than just a breakout, we want prices to again come and retest the area of the breakout before they continue in the direction. So this is a typical example where prices, a trend line holding, the a down trend line or a bearish trend line holding, and the moment prices close above it, rather than entering on the breakout, we wait for prices to come and retest the area around the area of the trend line before we continue for prices to continue up, right? This is a very clear example where a previous resistance, right, that has been taken out. Remember, these zones are called as flipped zones, correct? So the moment the zone flipped, the resistance that was holding the prices acted has now shifted to becoming a support. So the moment the prices break above the previous area of resistance, it gets converted to a support. So the retest takes place and we enter on the retest and not on the breakout. So these are the two kind of entries that we can take place: entry on breakouts and entry on breakout and retest. All right, let me show you examples as well. This is just entry after breakout, where moment the prices close outside, we enter on a breakout. While entry on retest is something similar, where prices are holding a particular structure, whether support, resistance, or double top, double bottom, or continuation or reversal patterns. We wait for the prices to retest the structure, not just wait for the breakout, but retest the structure and then enter, correct? Now some pros and cons of breakout, that is, less significant. We are focusing more on the structure, correct? And types of targets in terms of risk to reward. The bigger the risk to reward, the more profitable you can be, correct? If you are risking $100 to make $100, or if you're risking $100 to make $200, you will be successful more when your risk to reward is higher. So the higher the risk to reward, the better for you, correct? And in terms of support, resistance, and pattern projection, I guess we have covered a good amount of concepts, right, when it comes to basic technical analysis. So one small homework I would be wanting to give it to you, and that would be a task, right, because it's important for me to provide you. I want you to, select three charts. Right now, three charts could be any forex pairs, or you could look at gold, or you could look at, even the share market if you want to. So I want you to analyze whatever we have discussed till now. Right, we have talked about support, we have talked about resistance, we have talked about um, double tops and double bottoms. We have talked about, breakouts. We have talked about continuation patterns as well as reversal patterns, right? As and the different types of structure, right? Candle formations such as uh, head and shoulders. We already talked about double tops, double bottoms, and so these are, certain. I want you to go through three charts of your choice, and I want 1 second, and I want you to, analyze and find out. The more analysis you do, the more sharper you will get in terms of analyzing and understanding. Okay, this is how a chart looks. Okay, this is how a pattern looks. Okay, this is how a formation looks. The more you provide, the more you practice, the better you will get in trading, right? So I hope everyone understands that yes, I have provided you with theory explanation as well as I have provided you with the pictorial representation on the real charts as well. So please go through any three charts and try to practice as much as possible. For those who want to practice more, you can take 5 or 6 charts and practice on different charts to see what are the areas of support, resistance, how is the trend line, how is the channel, how are double tops, double bottoms, head and shoulders, inverse head and shoulders, reversal patterns, continuation patterns. Whatever we have discussed, just have a practice and get better at it. So I hope everyone had a good amount of understanding. Yes, today we were very clear and focused in terms of what education we are providing. Remember, we do provide you with analysis, but we also provide you with education, right? You are getting the best of both the worlds, correct? So I hope everyone had a great learning curve, and I will see you tomorrow, where we will be again looking at how the markets are functioning. With Tuesday coming into play, we will look at whether the optimism will continue for tomorrow as well, and we will update the charts and the watch list as well. So I hope everyone has a great evening and a great night as well. See you tomorrow, right? For tomorrow's first live streaming session. Until then, namaste and have a great day. Take care and